Good morning, StockTwits crew. Happy Friday, everybody. I hope y'all are having a great week so far. The trading has been a whole lot of fun. It's been volatile. FOMC data was a whole day in itself, obviously, ending with pretty much a nothing burger, of course, for the investors, but us day traders had a time. So, been a fun week. And we got my man Shay up here. What's up, Shay? Got Michael Nauss joining us as well. So, it's going to be a fun Friday. But how we doing, boys? How's the week been?
Anticlimactic. I wanted more action.
I know
I
you
wanted
did.
some volatility. I want some blood. I don't know. I'm off sides. I've had a 15% cash position for like kind of 2 months now, I think. It's been just building up my portfolio and adding slowly on some names, Mercado Libre being one of them. But September weakness, it's not happening. I don't think it's going to happen either. It's unfortunate.
That seasonality will get you, huh? What do you
Ugh.
think, Michael Nauss?
Well, so as a technician, right, it's one of those. I'm not a big seasonality guy, and if you look at the September seasonality when we are above the 200-day moving average or in an uptrend, it's awesome, right? So it's one of those. It's how far you want to slice that down. But yeah, everything's looking great. Happy new all-time highs for small cap traders. Looks like it's still a place that you can invest and make money, even though it's been in a 5-year base. And I, for one, am super pumped for that because it's easier to get a small cap guy up on great percentage returns than it is some of these larger caps, especially a bit extended here. So the rotation continues. They're still short the small caps, so I think something crazy is going to happen with that over the next couple of weeks.
Also, yeah, you guys also have to ask yourselves, like, for the market to buck their trend or actually pull back, there needs to be some kind of new variable that comes at the wire that nobody else anticipated. What will that be? I don't know. Like AI is the main event. That's not going away. There's no overspending for that's gonna have not gonna happen for a while. Rate cut cycle began and is beginning. Clearly, you're seeing these macro data fronts like not move the markets like it would. Like there's a couple macro data fronts that would cause a sell-off, especially in September when we got that light. But now I think people are realizing that AI is actually very real. It's very deflationary, and it's going to kind of provide this era of efficiency that any data point that we see right now will be, oh, that's in the it's even though it's today, it's dictated on the past because the future is going to change at such a rapid pace. So this doesn't really matter right now because everything's going to change really quickly. So now it's like, what else is going to happen that's going to cause a ruffle in the market? It's got to be geopolitical. It's got to be something new. And I got to say, China's been quiet for a long time, and that worries me a little. Like
It's a little
Trump and
scary.
China have been very quiet.
Well, and right, this is the question is, so if an event comes, something that could actually be serious, and these guys are the most short they've ever been, right? So we're focusing on the red line here. They have been more short the small cap index than ever in history, and it's never been at a higher price ever in history. You got to think that it basically softens the landing of any sort of these events, because if you are that short and that wrong, and then something comes out and say, IWM ticks down 4 or 5%, more people than normal are going to be using that as a chance to, let's take some of this off. We've been so wrong about this for so long, right? Maybe we can finally get out of this position. I think kind of what ends it is a hedge fund blow up. I'm still waiting for the news where there's no way that you're short net 100,000 contracts right here on the IWM, and you started your short position right in here. And it's kind of like the same with open. Like if you look at open with the short float data, they started shorting that in when it was a buck. So no wonder that's probably what's going to end open too, is we get what a Melvin Capital was. That was the one for GameStop. So that's what I'm looking at, is that until these guys have been blown out of their position, I think every dip is just going to continue to get bought. And then when they're done, then maybe something can come along and
Yeah,
give a
finally,
sustained
when they
pullback.
decide to go long, that's when that's when things will flip
Well,
around, and we'll get some geopolitical catalyst that brings the market in, and it'll be a good time.
also, I mean, we're almost at the time of the year where things get wonky up to the right. Like we're almost there, and
Yeah,
I do think there's going to be somewhat of a repositioning that happens from large cap tech to the laggers for the past couple years. Like these names have not moved really for a couple years. I'm not talking IWM because the Russell has a lot of banks, but I'm talking like the small cap biotechs. A lot of like the
Yes.
pre-revenue names that are just like been penalized from this high for longer interest rate that now all of a sudden rate cut cycle begins and an immediate recovery on the bottom line because all over 50 or 60% of those companies have a variable expense interest expense. So that means that as soon as the Fed cut rates, they immediately see a bump on the bottom line. And now all of a sudden their solvency risk improves, their cash burn improves. So I think that biotech, that you saw CRISPR names yesterday, they went berserk. But a lot of small cap biotech, that's kind of where you want to be, in my opinion, in Q4, because there's a massive catch up trade that's going to be had after the basing of 4 years where everything else has ran up, justified, markets rewarded them, but biotech has been penalized. Now it's kind of breaking out finally.
Yeah. And this is so I drew this as the anchored VWAP from all-time high. So essentially, you started to buy biotechs at the worst possible time, January 2021, and you've been averaging in. You are just now starting to flip, and that becomes a big sentiment thing, right? Where these guys, if we start breaking out and moving, these guys are actually making some money. So I couldn't agree more, right? This is again obviously very interest rate sensitive, but just from kind of a chartist point of view, get over 100 in biotechs, maybe we're going to take a shot at these all-time highs, and that's 200. So that's a double in just the indexes.
Oh,
And the
mhm.
biotech is more like bifurcated as a market as any, where you've got really amazing winners and then a lot of absolute junk that goes to zero.
Kind of like the meme coins, you know.
Well,
Yeah.
also you got to factor in the M&A spree that's going to happen now as well. I think a lot of people I've been talking to is just waiting for that rate cut cycle to begin, and now they can use that working capital they allocate on the sidelines. Like, all right, we actually might get 50, 75 basis cuts next couple of months. Like, there's no point of just continue keeping this on the sideline to get that return. Like, let's get aggressive, especially before these companies break out. Like they're aware. Like you'd be surprised how many C-suite know about what's happening in the market on sentiment, and they want to kind of front run that. And I think
Mhm.
for small cap biotech, like that's one industry where M&A is constantly active and it's constantly happening, and that it's been dormant a bit for past couple years. It's picking back up this year, but I do think M&A spree is also a tailwind for the space.
Well, and that's also the administration seems this administration seems way more open to buyouts than the last one where,
Mm.
was it Meta was trying to buy iRobot, they got blocked, the vacuum cleaner company. So that is going to be huge too, the whole regulation side of things. And I've already seen some of it. I know there were some the psychedelic sector is one that I follow, and there's been a couple buyouts in that space, and so
Mhm.
yeah, more and more, which I've been waiting for this chart for years to break out because I want to get pretty heavily here. Because if it just catches up with the rest of the market, again, that's a double from here, and then if it breaks that, you could get a little bit more. So I hope you're right.
Yeah, speaking of the biotechs and healthcare names as well, Shy, this has been a sector that's been pretty fun lately and getting a lot more action. What have you been dipping into on the healthcare side of things?
I mean, I will say CRISPR names is kind of what I've been my small cap portfolio. I think I own Intelia, I own Beam, I own Prime. I think that's a space where it's going to get re-rated solely on Verve. Like Verve Therapeutics got bought out for 1.3 bill.
Hmm.
That was like the unwanted child of the CRISPR family. Like nobody really saw the high ceiling in that name, and I think a lot of people were just like, that's too niche, low hanging fruit. They got a 1.3 valuation. So imagine like a CRISPR, they're a category leader. Like, yeah, they have a lower ceiling than a Beam or a Prime, but like every other name in that bucket should get re-rated based on Verve, the 1.3 that showed them in the lowest valuation. And I think that's why they're kind of getting re-rated a bit. If you look at NTLA, that their charts, they had a massive breakout yesterday, and that's because a lot of people are looking at the stock price and seeing, oh, this might just be a science lab project. It's not really a real business. They have no human data. That's false. Like CRISPR names have proven that they've had more human data validation of their sciences, but the stock price has just been penalized due to the higher for longer interest rate, or the appetite has been towards AI, not these pre-revenues CRISPR names. But yesterday, Intellia cleared a major step before getting pivotal data. I think it was they completed their enrollment in their global phase 3 trial, which essentially means that the study is now fully powered. You can get to read out, and investors can now circle on their calendar when the next catalyst is going to be. And I think that's why the stock was up 30% yesterday. And I think the uncertainty about can they get patients in, can they scale globally, there was somewhat of a question mark in that thesis for Intellia. Now they can keep that timeline. That now they can. It's more about like it's happening. This is the calendar date. We have a date on when we're gonna actually know information if it's gonna get commercialized or not. That's a big sentiment win, especially when their valuation is not that egregious, especially compared to Verve. So I think this is a really interesting space. This got ways to go. Clearly, like it's been penalized for a long
It
time,
has, yeah.
but we've seen squeezier opportunities, and this one is kind of got multiple tailwinds. And I know Kathy loves this name, loves this whole buckets. Don't know if that helps or hurts this thesis, but I have I think it's a 4% position in my small cap portfolio in Intellia.
I think that's solid, especially like you're just taking opportunity, right? You're taking opportunity where you see it, and 4%. That's very doable for you to manage, right? So I like that a lot. Michael Nauss, did you have any thoughts on the healthcare side or any of these biotechs?
I just think it's, we've been talking about the rotation forever, and it's going to happen at some point where, things like Nvidia and all that, there's a lot of funds and a lot of people that made a lot of money there. I definitely think that, technology has been going for so long that at some point it rotates down. I think biotech's a perfect place to do it. Plus, they should also be a huge beneficiary of AI, right? Of the learnings and everything that will come from that. So just from a interest rate point of view and all that, I think it makes perfect sense. And if you look at IWC, the market cap index, this thing has just absolutely been on fire. It's almost a 60% gain. So a lot of the sectors that these are in are rocketing as well. So it just seems like a perfect storm for a lot of these more speculative names until something comes along and ruins the market. But there's no sign of anything there. And with
Um,
IWM, new all-time highs just as of yesterday. Again, that's showing that people are interested in the space in general. They want to go lower down the cap curve and buy some of these more lower cap and lower interest stocks.
well, you also have to factor in like in the market, like there's some secondary things that are happening that's a huge sentiment boost. This week, for example, the Powell conference. Uh, my takeaway was he degassed now about it. Like he doesn't care about the equity markets like bubbling up. He kind of put that like it's not my problem. I'm caring about inflation and macro front. What did Trump just post this morning? A photo of like just what was that photo about the stocks going up? Intel, like he's like bragging about the stock market and bragging about Intel. Like this is a badge of honor for him. Like the stock market's doing well. And when you have the most powerful person in the world, someone who can actually flip a switch on any sentiment on the stock market, how do you not be bullish? And it's a little worrisome that it might turn into a bubble eventually when the capital can't
This
match
can't
the
end well.
valuations.
This
Can't
can't
end
end
well.
well.
But betting against the Fed and POTUS right now, it's like, why would you do that? Like, that's crazy to me. So like, things might get wonky and might get 2021 like, but or
I hope
2022 whenever the
hope
bubble
so.
bursted. Yeah.
I always just say, right, and there's the George Soros quote as well, right? That when I see a bubble, I run right in, adding fuel to the fire. And for us, it's bubbles are only a problem for people without an exit plan, right? If you're not using any sort of, if you're planning on just buying and holding stuff forever, uh, sorry, right? That's going to be unfortunate for you. But for us that are more actively paying attention to things and watching the market, if the IWM doubles from here and then gets cut 30% in half, that or it gets cut down 30%, fine with that. So yeah, it definitely feels like we are kind of in that. I think that 2021 comparison was a good one. It feels like we're going to start getting crazy like that with these crypto treasury companies. Just remind me so much of people buying and selling pictures of rocks for hundreds of thousands of dollars like we did in 2021. Question is, could we do another? And if you go to the SPY in 2021, uh I wish I was in this heavier in this bubble, and then you just had to figure out when your out was. But even if you were late on the way out, still made money. So I'm very pro bubbles. I hope we get in one. I hope we're not in one already. I hope we're just getting started.
We're in
Oh, yeah.
select bubbles. Like I think there's a couple stage 2 AI winners that are in a bubble territory. That I own a lot of them, and I'm not selling because I'm just long term. But like, there's a couple that are just like, what is happening right now? Like, this is like craziness. But a lot of the hyperscalers, a lot of the large cap tech, like they aren't egregious. Like the valuations, they're just not. Like Google, for example, you feel like they might be overvalued, going up. Like the amount of weeks they've gone up, they're not. I think it's like 30 times earnings, if that. I think you're seeing a lot of reacceleration on the cloud business, and you're seeing a lot of margin expansion on the bottom line due to AI. That combination, it's causing, like, even though stocks are going up to the right, the multiples are actually kind of staying in line to where it was 6 months ago, a year ago, because there's just a so many levers for them to pull in AI that they're just becoming massive beneficiaries. And then you're also seeing like names that were not an AI player now all of a sudden become an AI player because we're entering this utility economy for AI. I'm talking Nebius, I'm talking Iris Energy, like these power plays where they like for Nebius, like they just made a deal with Microsoft that was worth more than the company value itself. Yes, it's like nobody knows the margins in that deal. Nobody knows like how when they're getting profitable, but I think it was a stamp of approval that these hyperscalers, there's so much freaking demand that they just want to be able to source it externally. That's a huge validation for neoclouds out there. And then the way Nebius is holding this move as well, like it's so freaking bullish. Like when you go up 40 to 50% in a matter of 1 or 2 days, you think there'd be some kind of 50% gap retracements. This is just chilling. There's a psychological level clearly at 100 that it's not going to break, but it's going to be consolidating and basing, in my opinion, until the next earnings reports. And that's totally fine. But it's a $25 billion company now. And I think they are just the AI pie is so freaking big, and there's so many mouths to feed that a lot of people thought stage one would be over by now.
It's just starting.
Lisa from AMD just said it's two years into a decade long, and everyone I'm talking to in the space, they're just saying how insatiable the demand is right now from compute, that it's so freaking early that I just think that people are offsides on assuming that the AI investments are going to mature in the near term.
I love those thoughts. And I mean, like you say, you look at this, Shy, you take MBIS, the name off of it, and, you know, just looking at this from a non-biased perspective, I mean, I would have loved to be a part of this the past few months, right? Like, this is absolutely beautiful. And like you say, the stamp of approval with Microsoft, that just gives people confidence right there, right? You see that, and it's like, oh, if Microsoft's going to be, actually going with this, then I feel a lot more comfortable actually putting my money in there, right? I feel like that's the sentiment across the board when
Well, it's a
people see
backstop,
that.
right?
Exactly,
if they're
yeah.
going to get into, say this thing like craters for some reason, well, Microsoft will just buy it or support it
Exactly.
again. And so, right, they're not
It's
when
it's
when you're
NVIDIA
that,
and CoreWeave situation all over again. Like this is
Yeah.
like another version of that.
yeah, when you're playing with the guys that are that big, you're definitely not going to you're not going to let them lose when it's just pennies if they wanted to buy you out or support your business in some way. So yeah, it'll be interesting to see, because CoreWeave was just nuts. CRWB, yeah.
It's pumping the other day.
Hey, what's Intel doing pre-market? Actually, I forgot about
That's
that.
a good question.
Down 1%, so about nothing.
Loser. Oh my god. No, I mean that was a historic deal this week. It's just another emphasis on how big an AI is. I mean,
Look at that base too, Shy. Isn't that
oh,
me and Michael? We've been trying to find all these names with like these giant bases. There's so many good ones out there. BIDU was another one that popped off recently, getting out of that big range it's been in. But I think that's been the move lately, is finding these names that you really like with these big bases and just trying to load up and wait for that breakout. Honestly, I think it's been a great move. And for the people that are sitting back going, well, the market's at all-time highs, I don't know what to buy. finding these names has been phenomenal. Michael Nauss, I don't know if you want to talk to that a little bit. I know that's been part of your game plan.
Yeah, I always say, and right, for people in the chat, bring them to me if you see them. I want a base over a year long, something that was left for dead but just stopped going down for a period of time. And right, there's the old technical analysis saying the bigger the base, the higher in space. So, if you get these, and psychologically it just makes sense. You get the value investors that just kind of put their foot down and they just say, okay, I think under $20 is good price for Intel. And they're not looking to trade momentum. They don't even really care about the chart or anything like that. They have a price in mind that is a good value for the company, and they start to lean on it. And if they're right, then as these things move higher, then you get the momentum traders and the more growth oriented people kind of chase them. So things that just have not died and are sitting in bases have been big. And like one of them that I was looking at the other day, it's a huge base, but like this ROKU,
yeah,
like I don't even know why this company exists, but it went from 500 down to $40. So there was definitely priced at a zero, and hasn't been yet. Things like Peloton, I've been watching here too. Same kind of thing. These companies that are just left for dead, because a lot of them died. Like what Bird, and there was tons of companies that after the 2021 bubble there, they went to zero. So I'm just looking, like, find me the ones that everyone thought were zeros and just ended up not being the case, and then hopefully you get something like a Carvana, right? This is the kind of the poster boy of didn't base like that, but everyone thought this was gone.
I still don't understand the Carvana story because they have a ridiculous premium valuation. Let me pull it up real quick, see what it is.
Carvana.
Because Amazon is kind of entering their arena now, but like Carvana's trading at 80 times earnings, 42 times free cash flow. I don't get it. It's got a premium, and it's held up. I think this is it's a classic example for me. Like maybe it's just not my lane. I just will never understand it. Like there's some names out there I just will never understand. Like I missed the SoFi boat. I missed the Robinhood boat. Like maybe I'm just not a fintech investor. Like there's certain names I just like what's happening. But I'm curious though, Michael. After this, if you want to talk about Robinhood, but I want to get your input on Trade Desk because that's getting priced like it's gonna die.
Yeah, more of a base, but yeah, definitely it's a hard line to walk, right? But what I want to find is not so much a downtrend, but just where it kind of stopped going down, right? And the idea is that the way I look at it, there's kind of two different traders in the market. There's you could basically split them up, Kathy Wood and Warren Buffett, right? Warren Buffett says this is a good price for this company. I'm just going to put my line there, like he did with Oxy, and you can see it was like $56 for years. Every time it hits $56, he's like, I'm going to buy. That's the value that I put on Oxy, and we'll never chase it higher. We'll never pay up for it. That's his price, and that creates these long bases. And then you've got your Kathy traders who are like, I'm just going to buy the thing as it's rocketing, and quite often end up top ticking it, but I'm just looking for that long-term growth. So when I look at TDD, this is something that like wake me up in like a year or so if it's just stopped going down at this price. Nothing I'd touch here.
That's the tricky thing though about this market right now, because like I'm sure like people have a lot of cash, and like where do you allocate your cash? Like everything has ran up so freaking much. Like my watch list, my top 10, my growth portfolio, every name is like I felt uncomfortable 2 months ago participating in it. Now I'm like, even if it pulls back 25%, like it's too much for me still. Like Oklo, for example, dude, it's at 110 now. I think it hit 105. Like that was wild. Like I think it's a great, it's my favorite SMR play, but AKLO. Okay, sorry.
Okay.
OKLO. Yeah, my bad.
Yeah.
That one's it's just nonstop explosion. Like, but another proof point though, like wait for a black swan event. Like some reason in this new world we're in, we have a black swan event once a year now. It used to be once or twice a decade. Now it's like we have the Yankee trade crisis, you have the Terra 4. I justify the bubble bursting in 2022. I guess 2023 just took a chill year and like, ah, man, too much. I'm going to not do anything. But like every year we've had some kind of crazy event that's had a pullback. So I've been waiting for that for 2026.
Where
Like
is
maybe that
it?
happens next year, but I don't
Well,
know.
That's what I'm starting to lead into, honestly, especially like on crypto as well. I think
I went
2026 is going to be more the year that I need to look for the dips.
Yeah,
But
on this week I went to a conference with a bunch of technicians out there, and like 4 or 5 of them, like really kind of well-respected technicians, had 2026 on their bingo card as a top. It was like mid to end, and a lot of them were saying it had potentially a lot to do with your guys's. You have an election, I guess, the end of 2026, midterms, or I'm Canadian, so again,
I was gonna say I always forget you're Canadian until
I
those
just,
statements.
but you got something, and a lot of them were just looking at the seasonality in the past, and generally speaking, around that time, you get some sort of choppy action to the very least, if not, a full-on kind of pullback or a crash. I'll see if I can find the chart, but a lot of them were looking at that and combining some things that I don't put a lot of weight on, like cycle theory and things like that. But they had that kind of mid to late 2026 pegged as this is potentially a time to look for. Here's the chart here to look for a potential pullback, but yeah, there it's right, right here. All right, so this is the black line. It's basically splitting up the S&P 500 returns to by year based off an election year, a post-election year, midterm year, or um, pre-election year, and the red line is what we've done currently, which is so far kind of tracking. But if you believe this number, again, this is going to be an average, so it's obviously going to be much smoother than what actually happens. That from now until that election's over, or that election's at least, I think, very close enough that it's called, you get a whole bunch of mess. And also, a lot of people are thinking, well, maybe we do ramp up into kind of midway through 2026, and then that's where we have a nice sustained 20% ish pullback in the overall markets. And then when the election's done, you ramp up, and then right before the next election, you chop. And the reason I'm not a big seasonality guy, but the reason I like your whole election seasonality is it makes sense. If you're leading up to an important election of lawmakers and you don't know what side is going to win, that becomes very hard for long-term investors, where there might be one side that favors certain sectors, the other side that favors other sectors, and one that's more pro-business, one that's more anti-business, or something like that. So during that period of uncertainty, when polls are coming in different ways, you get this kind of dispersion of returns. And then when the certainty hits, like we all remember what happened right after in November of 2025. That was like the day after Trump got elected, the markets just rocketed to new highs. So there are a lot of people are thinking that that's the same kind of idea to look at and say, hey, it might be time for a little bit of a chop, if not a bear market, a pullback and a consolidation. And to me, that's good enough. Either one of those gives you a nice little base to play off of, to say, okay, the market's kind of come up and it's reached a new level, and give a couple cycles for earnings to kind of catch up to valuations, and then pops from there.
makes sense. I mean, I've been on a lot of panels, a lot of spaces with a lot of different traders, day traders, investors, and that's kind of been the overall sentiment from what I can gather. Is especially like I have a few buddies that are on the panel throughout the day on our X spaces. Ooh, there's the bell. Let's go. Market's open. But that's definitely been the consensus that like we have been absolutely flying, and it's nothing saying that this market can't continue it, but from a more cycle perspective, it's starting to seem like 2026 is that year too. Again, it doesn't mean we're gonna tank, but just slow things down, right? I love that chart that you were showing, Michael, where we were just going pretty much sideways. Yeah, right there. I mean, it's boring, don't get me wrong, but that's what needs to happen, right? Like
Well,
the higher time frame flying we've done to the upside, that's gonna have to result at some point in some breathing, right? And we know the market loves to go sideways when it gets going sideways, and I just think you got to be ready for that time and be able to take advantage of it on the intraday if you can, obviously on the short term trading, because investing and swing trading is very hard in that environment, right? And so that's where I think just finding those names that you really love and taking that time to load into them as much as possible, right? And sit back and just stay patient. That's all you can really do during these times, because it does get quiet, it does get really boring, and that can be that could be the death of some investors just because it's boring, right? And they can't
Should be
sit
boring.
with patience there, but it should be boring.
Yeah.
Exactly. Thank you. Shai, did you want to
Oh,
pop in? I feel like you
yeah,
got some
I
thoughts.
also do want to caution, like, I don't think that indices will pull back too much. I think
Agreed.
micro bubbles will
Sideways.
pull back. It'll be indices will be sideways. AI too satiable demand is way too high. I think again, these are names I own. So like I'm a shareholder, I'm not talking bad about them, but like Oklo above 100, IonQ above 70, like Pound Palantir keeps exceeding expectations every 3 months. I don't justify it. Like Palantir is a great. I had an argument yesterday at this conference I was in. I'm in right now. Palantir is kind of crazy. I get it. The valuation is crazy, but like entering this year, everyone on the street thought they were going to come in at $3.5 billion for the full year. Right now, we're halfway through the year on actuals. Estimates are 4.2 billion. That's a massive reacceleration, and their margins are expanding at the same time. So, like, I get it. Valuation is crazy, but like, when you beat by that much, only 6 months into the year, who knows where they're going to end the year at? It could be 4.5, for example. Like, it could be a 50% higher than what the estimates were, and they're at 40% net income margins. And we have names like OpenAI who have a similar valuation who are bleeding cash, bleeding cash. You have to ask yourself, okay, Palantir at 400 bill, it's a tough pill to swallow, but the way they're exceeding expectations every 3 months, you need to reward that. It's something you just have not seen since the Nvidia days. But the difference is Nvidia back then, there was a cyclicality nature to hardware spend. Now we're seeing the cyclicality of semiconductors kind of fading a bit because the demand is so ridiculous right now. But like Palantir doesn't have that cyclicality risk at all. It really has that recurring revenue nature of it because it is this like data infrastructure operating system. So I think that right now, like I will, I did the math. Like they do have to kind of have a insane statement. I'm gonna say, but like 28 to 30% CAGR for the next 10 years to just justify this current valuation. I think they can go, I think it could be a little higher than that. I think that AI is under, it's a lot of people are underestimating AI in the enterprise space. Like enterprise AI and enterprises haven't really started yet. Right now, a lot of the spend is coming from sovereignty, it's going from like these massive deals, like AKA Stargate, AKA US, UK, these hyperscalers spending on all the tools so they can fulfill their compute and energy constraint issues. But on the enterprise side, it's Daniel and I were talking about it a couple days ago. Like it's really like 1 to 5% right now. Like it's so freaking early on AI spend in enterprises that they're not really doing it yet. That's why I think there's so much runway for like a Palantir when they're making this much money and they have hundreds of customers. That's it. Like imagine when they have thousands of customers. Names like Cloudflare, like they're Cloudflare is probably the most like under discussed monster of a company right now as well, where they can truly be another hyperscaler the way they're trying to tackle the new modern internets. And don't discount them on how important they're going to be once agentic AI comes to light. But they've shown a lot of strength. But like, it's just, uh, I don't know if I'd get into Cloudflare above 200 either. Like, there's just so many names that just like I don't know what to do about this. I sold half my strategy is like when I have an overweight position with conviction, I sell my risk when it becomes a
There you
multi-bagger
go.
and I let the
Yeah.
rest run.
Yep.
Palantir, I sold half of it in 70s. So like I look like the schmuck, but like dude, it's my number one position and I have a rule that I'm sticking to. Like it just keeps running and it keeps holding the top position. Like it's crazy. It really is.
It is insane, and something like PLTR, I mean, was not on my bingo card to be where it's at this year whatsoever. But I think what you made a great point. Like, even me, I've been coming in, and I'm just like, I, I almost am thinking like, oh, it's not true, it's not true. But you can't ignore what PLTR is doing, right? You can't ignore the space that they're breaching into, and I have been personally. That's why I don't own any. So I'm the real schmuck, Shy. Don't worry, but
No, we
uh,
are. I mean, listen. I don't own any nuclear names, and I've been very bullish on nuclear.
it is
Uh,
what it is. You know, you gotta wait.
yeah,
You gotta wait a little bit to have some extra confirmation on that. You
Well,
know?
and on Palantir, before we move on, just look at
Yeah.
what's spurred it
The
all on,
base,
right?
the
It was left
base.
for dead, just like anything. IPO'd, rallied a bit, completely left for dead. And if you count it, right, February 2022 to May 2023, and I don't think that year is, you know, any sort of magic number or anything crazy like that, but it just gives time for the big boys to accumulate, right? It gives time for earnings and fundamentals to change. As someone who doesn't look at the fundamentals of things, then I just know that there are a large group of people that have said, okay, this is roughly fair value for it. And then at the very least, you're not really guessing about the trade, right? If it breaks out and it continues, great. And if not, you stay in. And I would just, you know, I have the same rule. If I am ever in anything that doubles, I sell half, and I actually physically move the rest of it to another brokerage account that's outside of like my trading account.
And you
Something I
never
don't
see
even.
it again.
I don't have the app on my phone. I have to log into it. So I don't know. Other than that, just eventually maybe we'll just start paying you dividends, and you don't have to think about it anymore, right? They go up for another 5 years, and then they just start returning capital to you that way. So because I always look, and you know, I always show these things to Jordan when we look at them, is just, you know, generational wealth you don't think would be Costco, but there's some
Monster,
things that just, yeah, Monster,
monster too.
um, MNST, I
Well,
think.
that's
Yeah.
the thing. Like
Sure.
long term, like when I have grandkids, like I truly do believe that Palantir is gonna be a multi-trillion-dollar company. Like I don't think anyone does what they do with AI, but I just it's factoring in opportunity costs. That's the question now, because it might not move. Like some of these names might not move for like 2 years. All of a sudden, then you're under like your over index positions are underperforming the market now, and now you have to like the names I've been sticking my neck out of, like I think this is like the market's mispricing them. They have not worked out. Like they haven't. Like Unity,
Mm-hmm.
I have zero idea why Unity is catching a bid. I just completely sold that off finally this week off my books. But like their moat has eroded, and I just think they're catching a bid all of a sudden, due to like I don't know, maybe M&A floor on the stock. They've trimmed the fats. They're getting a much better aligning on what to do going forward. But like they are nowhere close to why I invested in them a couple years ago. I
Mm-hmm.
chose them over AppLovin, and that is one of my biggest mistakes I've made in my career for sure. That I will always like Jordan, you know this in the beginning. Like I call myself like the Judd Apatow of investing because I'm romantic with my holdings, like too much emotion.
Yes. Yeah,
Um,
you get very in love with your positions.
exactly.
Yeah.
Unity was the one that my toxic ex girlfriend that I always came back to because I believe in their story and I just ignored what I was seeing in front of my eyes. Great example, like of just can't be
Yeah,
emotional. Like
guys,
Michael said it
this
before.
isn't
Yeah.
about stocks, by the way. If you're
Yeah. Oh my god. I mean,
oh my
also
gosh.
sometimes it helps. Like Palantir, Rocklab, IonQ. Like those are like I've been emotional about them for years, and like
Yeah.
I held conviction. And IonQ is just like it's crazy the deals that they're getting right now. They're becoming a prime, to be honest. Like they're not really a hardware company anymore. If you're seeing their government deals they're getting, but the whole that there's some quantum names that have zero idea why they're catching that much of a bid either. Like that whole bucket is wonky right now. Like I think IonQ is clearly the best of the best in that space, but everyone else, like they're getting massive deals justified IonQ. Like the rest, like D-Wave, Qubits, they're all catching crazy bids. Like look at
Yeah,
this.
look at that, dude.
That's a
Oh,
crazy bid. And
Crazy.
this one is just crazy. It's
and just
just
continuation too. It's not like falling off a cliff right after. Maybe things slow down for a bit, and you hold price and just try and
yeah.
continue higher. It's wild.
I mean, I do hope that Robinhood allows you to short position soon because I might I might actually do Qubit as a short up
There
here.
you go.
Like this
The
looks very toppy.
Yeah, and if you want, again, why they're all kind of rocketing like that is because a lot of it has to do with liquidity, right? If you're a
Yeah.
giant multi-billion-dollar hedge fund and you like IonQ, you might not be able to get in as much as you want of IonQ. So you get the bulk of your position there, and then you spread your rest your out in anything quantum related, just knowing that there's going to be some correlation or some sympathy there. But super common strategy to buy the leader and short the laggard, right? As you know, I worked for a hedge fund. That's all they did. You know, she'd be, if she was Karen Feinerman, she was on CNBC a whole bunch. And yeah, it would be okay. Never a bet on what's going to happen, just a bet on who's going to win. So, you know, JP
You
Morgan versus Citigroup kind of thing, right?
you brought up a great point. Ever since I started on the institution side, past couple months, I underestimated how many people have to do a pair trade. It has to be a pair trade. It can't. If
Mm-hmm.
you believe in one thesis, you have to do the opposite along with that initial thesis. So like a lot of times when you see a massive move, maybe sometimes you need to ask, all right, is it because they're short something else that they
Yeah.
have to go long this? So for quantum, if you're going long quants, I think a lot of people are just like, there is a lot of dollars being had on the quantum space. Like, why? What's that offsetting? That could be offsetting healthcare, for example, or something that's like a defensive play in the equity markets, like they're short, or there's just a lot of like ways to play the liquidity, like Michael was saying. When rate cuts happen, where does the speculation go? It goes towards these secular growth themes that have ton of runway, who are very futuristic. It's going to be a reality someday, but very futuristic. Those are names that are catching bid: nuclear, quantum, space.
Mm-hmm.
Um, it's just it's not
The
SPAC bubbly, but it's something for sure. It's getting
cat
there.
is flying.
Yeah, well, and this is one of my bigger holdings too. So NLR is just a good nuclear space, and a lot of that too is ETF effects, right? So if people, like why does everything go up together? Well, again, NLR is just a nuclear play, so it's got uranium, it's got CCJ, it's got all the small ones like Oklo and SMR and all those things. So if somebody wants to take a bet on nuclear and they buy this ETF, the ETF has to go out and buy all of those other names in order to get them. So the
Mm-hmm.
more of these kind of thematic ETFs exist, the more correlation exists within a lot of those names. And right, as a quant, I know I'm in that kind of quant community. There's a lot of people that play that game. That they play the sympathy game. They look for X company to move, and they're the ones that are trying to front run the ETFs and things to move the other companies. So they would be buying the junk just because they know it has to be kind of dragged up with the winner, because we're in a world in which everything kind of correlates because these ETFs exist, right? So it ends up being a whole, not this company good, this company bad. It becomes a lot more of like thematic sectors and correlations and things that move together like that.
Mm-hmm.
Hey, Shy, I want to get your thoughts. Maybe, Michael, you can bring up the Tesla chart. Tesla lately finally picking up a little bit of a bid. I'm curious if you had any thoughts on this, because this is something that I know we've been watching for a while. It's been choppy relative to the market. The market's been at all-time highs, and this thing's just been going sideways. But now we're finally breaking some key areas. So I wanted to hear about your thoughts on Tesla. We're getting close to those all-time highs again. I'm not sure if you own any, but I'd love to hear the
Oh
breakdown
yeah,
from you.
I do own. It's like a top 10 position, number 8 or 9 maybe. But I think Tesla's benefiting from the scarcity of how many physical AI players there are in the space. I think everyone knows from everything that Jensen's saying that physical AI is here, and it's going to be explosive. Potentially the biggest TAM in mankind's history. Like it's going to replace, or it's going to attempt to disrupt a lot of physical human labor, and nobody can put an estimate on how disruptive that is. But for Tesla, for example, let's just say that they're obviously trying to tackle the physical AI embodied platform. That's what they're trying to scale into. Everyone else in that space is kind of doing very niche plays. Like Amazon is the leader in physical AI, technically, in my opinion, due to their million robots in their warehouses. But it's very niche. It's in a little sandbox where Tesla's trying to conquer the world, and nobody knows the timing of that. That's the biggest variable in the formula for Tesla becoming a should we buy Tesla right now for that physical AI winner? Elon buying stock, although it's only $1 billion, I totally get that it's pennies found in the couch. So it's a sentiment win. First time in 5.5 years. It's something. Along with his new payment packaging plan that's all incentive based on specific financials and specific stock prices. Like there's a ton of incentive now for Elon to kind of go back to his CEO mode and Tesla like it was the past 5 or 7 years, and no more political drama. That's a huge victory. And I think that's if he buys $1 billion, like maybe the S curve is a lot sooner than anticipated. And I think that for Tesla, like their ability to convert these perception models into actual revenue stream is going to happen at a very rapid pace because they have the Robotaxi that can essentially transform these idle vehicles into these yield generating assets. Like you can get an ROI now on a car potentially if you're a consumer. That's
Dude,
crazy
seriously,
to me.
that's the first thing that popped into my mind. I'm like,
Yeah.
consumers are gonna get a literal return on investment with this. Like that's insane.
They can scale mobility like it's a SaaS product. It's kind of
Yep.
crazy. And then you have Optimus, which can convert the same exact vision stack into the humanoid labor. That's like the scalability of what Tesla's trying to do on physical AI. Whatever works on the car kind of can work on humanoids because they're using the same neural network. And I know Google Waymo is clearly the autonomous winner right now, but I think that Tesla can undercut them based on Tesla already owns the data, they own the hardware integration, and they have the training infrastructure for scaling quickly, and they can undercut the pricing on Waymos way quicker than lidar prices going lower and lower. So I think that and the third one is they have megapacks that can monetize the grid itself. Like that's going to be a massive constraint issue for AI data centers. Like AI data centers are accelerating grid strain at a rapid pace, and Tesla's kind of positioned to sell energy infrastructure into the very demand that AI is creating. So like they are a $1.3 trillion company. When you look at the valuations out there in the markets, uh, the amount of secular growth themes that they can be a category leader in and the market opportunity is so vast
It's huge. Yeah.
that it's huge that as soon as like we get the first order that Amazon is going to purchase 100,000 hundreds of thousands of humanoid robots, the race is on. All
It's
these
on,
customers are going to put
baby.
backlog orders. So like the revenue itself doesn't really matter, but the backlog does. And you know that Tesla's going to be able to deliver the manufacturing because they've proven it already on the cars. They have the logistics nailed down. I think this is like one of those runners that people are going to think about. Oh my God, I knew robots were in the future. Tesla, Elon
Dude,
clearly
you're
has
getting me
never
too
failed.
excited. You gotta stop. You get me
But
too excited.
I haven't
See
added in
Jordan
forever.
opening up his broker to buy a couple more and
I
buy
still
Oh,
haven't
calls.
added.
I have
You hear how
enough.
bullish I am. I still haven't added in a long time because it's still a proof of concepts issue. We'll
For
see.
sure. For sure. Well, I'm curious. What would have to happen for you to say, okay, I'm gonna start really loading the boat on this here.
I think that people are severely underestimating Robotaxi scalability. I'm in Austin, very different situation on the scalability of a Robotaxi as it would be in Denver. Like every city is such a
Mhm.
snowflake that's like I think that's gonna be a lot longer than anticipated. Humanoids, I do think it's gonna be a lot quicker than anticipated. So as soon
Okay.
as I see like a major order, it doesn't have to be from Amazon, but it could be like someone like McDonald's or like these kind of industries where they have low margins and clearly physical AI is their margin lever they can pull. As soon as that happens, I think that I would start aggressively adding. Or I've been trying to add under $300 and it really hasn't gotten there.
Hasn't worked out. I know. I was trying
As so
to.
yeah, so like the risk and reward is much better for me when it's like under $1 trillion.
Mhm.
But right now, like it's running, technically breaking out. There's a lot of tailwinds for them. 2024, 2025 was a shit. 2025 was an absolute shit show. 2024, same thing. Now that year-over-year comps are kind of in their favor a little as well. So like it's kind of a great setup for them.
Yeah, 100%. You got any
If he,
thoughts, Michael Nauss? You want to
well,
jump in?
if Elon can shut up, I think that's the big thing. He's just gotta stop fighting with the most powerful dude in the world. But technically, it just looks great. Right? We talked about the bigger the base, the higher in space, and this thing's been consolidated. It's a huge base, but it's just been consolidating. Hasn't gone anywhere for like 4 years.
Oh wow.
So when people you zoom in a little bit too much on Tesla, I think you do yourself a disservice. But generally speaking, when you have these large bases, they're going to resolve in the direction of the underlying trend, and that is higher. And last time it broke out of a massive base like that was back here. It was $20. It went to 400. So could do it again. I don't see why not. Right? 1,000 seems reasonable. Just looking at the chart for this, which would be a 3x from here.
Oh, oh, that will be good.
Well, that's the thing.
That will
Story
be
stocks are
so
getting
good.
story stocks are getting rewarded right now. Like, why
Yeah.
wouldn't Tesla be capitalizing on that? Like,
Exactly.
Oklo being a $20 billion company, IonQ being a $20 billion company, like these are story stocks. They're not backed by anything really fundamental. Like Tesla alone, like people are focusing on their fundamentals. But like, unfortunately, we're in this environment where that's a backseat. Like it's all about the story. It's all about the narrative. It's all about the
Mhm.
opportunity they're trying to tackle. Because for the first time in history, I know I'm only 32 years old, so like I'm talking like I've only been doing this for a decade, but we've never had this many super cycles happen at the same time. Like AI, space, quantum, electrification. Like
That's the thing.
there's
Everywhere you
just
look, every corner,
it's
there's something happening
it's
right
something.
now.
Tech revolutions used to happen once every 5 to 10 years, and it was like the cloud was like the last one that was before this. I don't count 3D printing because that was just like a product. It wasn't really a revolution in my opinion.
Yeah.
But like the dot-com era, the cloud was more of a product. But like when was the last time we've had this many super cycles happen? It's never happened before.
Yeah. Couldn't agree more. You guys got any thoughts on some of these meme stocks that have been going around? I mean, well, meme, I'll say, but I would throw open in the meme category. We've been watching that. That thing has just been flying. Look at that.
So full disclosure.
See, that's so scary to me, but I mean, I love to see it.
Yeah, I'm in open. So just before, right? I always, because I talk my book, I'm in from around 3, and the whole
Insane.
premise was just studying the short float data, right? I'm big positioning guy. I think more than anything, the company could be great, but if everyone knows it's great, doesn't help you. I'm huge into just the positioning overall. And what I liked about this one is you can see that this chart down here is the short float data. It went from a 10% short float to a 25% short float between $1.50. So we know most of the shorts exist down here. And we got a recent report, I think last week. And not only did they not cover, they shorted more. So again, I think this ends with some sort of hedge fund explosion. I've certainly took off most of my position, so whatever if it goes to 0 tomorrow, I'm fine. But yeah, I the game plan for the rest is I'm not even looking at the price. I'm looking at the short float data, and when this kind of ticks back down, then I'll get out. Until then, I don't see any reason for it to.
I
Yeah.
mean, I love the open door story. I'm super about it. I
Oh,
think that
Shai's bullish on it. Okay. Shai
I'm
likes it.
bullish on the movement, and I think that it's another classic example of the democratization of investing now. I think that, first off, the housing industry has been an absolute freaking mess. It's awful, and it feels like it's one of those industries that needs to be shaken up in this new digital economy in some way. It just has to. It's too guardrailed. And I think that healthcare industry and housing industry, like those are two spaces that need to get shaken up a bit. And I think you're seeing it already via telehealth, like the Hims and Her Health and Oscar, what they're doing in the healthcare space. Why not Open Door being that category leader to do in like real estate? Like I know everything about Open Door is based on what they're going to become. Because right now, I think iBuying is an absolute dud. I think the new management is also kind of indicating that maybe they don't want to make that their North Star. But I do think that the rally they're experiencing right now is a combination of short squeeze, but also potentially an early S curve story that meets late cycle liquidity, like what Michael was talking about. It kind of feels to it where they had leadership resets. They have a really great CEO right now that comes from Shopify, that is an absolute platform that kind of disrupted the brick and mortar business. They have the leadership in place to kind of turn this into a platform, cut all the fat. They're way overemployed. And now they got the founders back on the board. Yes, the founders didn't do a great job the first go around, but they have their name, reputation attached to this company. They have the leader in place to kind of maybe be a thought partner for them on how to do things a different way. And I think they're now going to be pivoting from that heavy balance sheets era, aka iBuying, to more of the platform. And I think the core engine is iBuying that needs to change up a bit because unit economics don't make sense. It doesn't clear the bar for me for an actual re-rate, but I do think that if intake collapses, I think homes under contract fell off a cliff and contribution margins kind of compressed. It, as the older inventory lingers, like guidance, and I think that there's a way for this to like kind of go upside down. I mean, like rates are going down, volumes go up, and the spread expands. Like literally, there's Sean Shakria's shirt about that, where open door, rates down, volumes up, spread expands. Like that should be their motto, and I think that that's what they're going to turn into as a platform play. Uh, I'm bullish on the leadership change, and I'm bullish on the possibility of their pivot on the business side. Uh, Got to see it happen, but the story makes sense again. Like we're in a story stock market, and the real estate industry needs to be shaken up a bit. And why not that be open door?
Yeah, I love your explanation on it. And hearing you talk about it, Shy, makes me feel a lot better about open now when I look at it because I trust your thoughts. You know what I mean? Sometimes when you're talking to people, I'm like, what you say is valid, but I don't have that sense of trust. So I like to hear your thoughts about this because again, I mean, the amount of times I'm looking ever interested in a stock under $10 is rare, right? And so I like to get the insights.
Well, we have to see if they actually do it though. That's the thing. Like
True,
I think they
true.
should do it. It seems pretty easy, but their board of directors, like, why wouldn't they get Eric Jackson on the board? Like I think every board of director needs a retail sentiment guru almost of like,
Mhm.
all right, well, you're making this big of a pivot in your business for the first time ever, essentially. Why not have someone on the board that says, all right, what's the feedback going to be? What's the sentiment read on this kind of pivot? Why not do that? It
Mhm.
makes too much. Maybe it's because they have too much access already to Eric that they don't feel the need to give him a board seat and pay him 250K a year. But
But they
I
should.
just they should. I think
They
that
should.
being a retail whisperer is a real asset these days, especially on a story stock.
It is. If you can be a good spokesperson to retail to your investors, I mean you're golden, right? You win them over. I mean that's the market share you need, right? So I mean look at Bitcoin and like someone like Saylor, right? I mean that's really your
Well,
example right there.
not even that. Look at IonQ. Like IonQ, Nicola
Yeah,
Demasi has
yeah,
done an
exactly.
incredible job since being
That's
CEO.
that's a way better example. Yeah.
Yeah, it's like uh, the previous management was all about hardware, hardware, hardware. Like obviously, qubits are such so far away from actually doing anything. Like so far away. Nicola knew that, so he wanted to push for a quantum network. And what full disclosure, I should probably say is IonQ is a big as a customer of Futurum as a client, and we work with them directly. I owned the stock years before I started at Futurum, so everything I own really is from pre-time. But they're trying to become that prime contractor now for quantum, knowing that hardware is years and years away. Like we can't just be a hardware company. But as soon as he came on there, he was able to communicate that vision on that push for the quantum network and acquire all these tools to sell that narrative. It's very similar to what Salesforce did in the cloud era. Like when Mark Benioff was actually a good leader um, back in the
Ooh,
day, he
shots
acquired
fired.
all these BI tools to sell the platformization of CRMs, essentially. Unfortunately, his ego has gone maybe too big to actually innovate and pivot his strategy because right now he's just land and expand via BI tools, acquiring companies that doesn't really make sense on what a new digital economy is heading towards, and it's just causing dilution, synergy risks. That's not the way to do it as a mature company, like just the way he's doing it. But IonQ is kind of following a similar suit on the early Salesforce days of being an acquirer as a category leader and just getting all these like tools. Like they just got a space deal MOU on space this week because of one of the companies they acquired. Like they wouldn't have done that before on previous management. So like I think I know I digressed a ton right there, but like I think leadership and being able to communicate a narrative is so big that a lot of board of directors should have someone who can help with that.
Fully
Well, and
agree.
especially when you're when your numbers can't speak for themselves, right? I think
Exactly.
that's the
Yeah.
big thing is, right? Apple doesn't need a retail whisper because it's just this is, what's coming out. But yeah, I couldn't agree more for a lot of these. And even I'd say I think biopharma is really underutilizes that. Where if you're a company and you're actually trying to change the world when it comes to people's health or mental health or whatever it is that you're building, yeah, these guys do a piss poor job communicating, probably because they're just staffed with scientist nerds the whole time. They don't have anyone that say, listen, if we're right and this drug works, then this is going to be the benefit to it. Because You always hear these companies come out of nowhere and they're like, oh yeah, we've done this thing with cancer and it's up like 200, 300%. It's like, well, why don't you trickle out, anything that you're legally allowed before then? It probably would have helped you raise money. And that's my big thing with open doors. I know if they're smart, they're going to do a Carvana where they're going to take this first big move and they're going to raise a crap ton of money off it. And that's going to hurt the price short term. But that hopefully for the long run will give their leadership the leeway they need to make whatever change they're going to make.
I also think what shouldn't be discounted is like raising isn't the same kind of negative sentiment anymore. Like I think you're seeing a lot of companies do some raises past couple weeks. It's finished green a bit. Like Nebius did a massive dilution. Rock Lab, ASTS, they've done dilutions. Like they're just like they're responding really well. Like Rock Lab just did it was a 3% dilution still, but they did 700 million, I think it was, or $600 million. Like I think right now is the prime era to kind of raise those funds, and Open Door specifically. That heavy balance sheet was my heartburn. You could remove that pretty quickly, and all of a sudden you have the soldiers in place to make that pivot to become a platform. And now what are the bears going to say? Your balance sheet is a lot cleaner than it was before, and you're trying to disrupt this massive industry that you're positioned the best you've ever been. Like you're going to get that re-rating.
Yeah, it's all about faith. If your investors have faith that you're diluting the company 3%, but you're going to add way more value than that in the long run, then that's great. And diluting when you're in a position of strength, I think, makes a lot of sense. It's the companies that are tanking and diluting on the way down. I'm looking at you, AMC.
It's rough.
I'm also looking at you, Redwire.
Yeah.
Oh, Redwire, yeah.
Redwire. I mean, Redwire is another great example of like you can't just be bullish on the space. You gotta be bullish on the management. And Redwire has the sketchiest management I've seen in a while. I've been fully out of that. You don't go on TV and pump your stock 2 days before rug pulling on one of the worst earnings reports I've seen in a while. You don't do that. You don't. That's the worst corporate governance you can ever be a part of. And he did that. And I was
They
just
said,
like,
"Watch
wow.
this, Shy."
Yeah, you're a schmuck. I guess we're all just schmucks for trusting you, but like I know people, you should give people a second chance, but in small cap investing, it's all about management.
Yeah.
And if you don't trust them after the stunt he pulled, you're dead. Like that's like I know I'm the Judd Apatow of investing. That right there, my wife just cheated on me, and you didn't. It was my best friend, and I'm never gonna trust you again.
Never again. Yeah. No, it's a tough one for sure. Gosh, what a great morning, y'all. Shy, it's so much fun having you on, bro. It reminds me
Thanks
of
for having me.
our normal morning shows we used to do. So appreciate you, Michael Nauss. Always a pleasure as well. If you guys are in the audience, make sure you like and subscribe on the StockTwits YouTube channel, of course. We're gonna be live on the Wolf Trading channel throughout the day. If you guys want to hang out, do some live trading, of course. But that's gonna do it for the Friday. I don't know how much opportunity I'm taking today. I had a lot of trades this week. So I'm probably just going to kick back and chill and hang out with the crew on stream. But always a pleasure, y'all. Make sure you guys are following Michael Nauss and Shy on X, of course. Follow myself. And yeah, make sure you subscribe to the channel. We'll see you guys next week. Enjoy the weekend. Enjoy the day.